we make our money by investing in a business today that's this big, and then by the time we exit, the business will be much bigger. And we do that by being patient. My name is Jamie Roberts. I'm the Chief Investment Officer for YFM. We are an investor into small, fast-growing businesses in the UK. We back management teams who are looking to do something interesting with their business and create more value, normally by making their business larger than it is today. So YFM is one of the oldest private equity fund managers in the UK. So we're founded in 1982, independently owned, so still owned by the partners. So the people who you meet, the people who make the decisions, it's our business, which allows us to be really nimble, allows us to move quickly. And it also means you've got real senior stakeholder engagement on the journey. We've got regional coverage, so we do invest across the whole of the UK. So we've got an office in London, we've got Reading, we've got Birmingham, we've got Manchester and Leeds. And we're just as active in those parts of the UK as we are in London, and that's really important to us. We think there's huge opportunity in Manchester powerhouse, Leeds has got loads going on, Birmingham's got a really vibrant economy, and we're keen to support businesses there as well as we are in London. So YFM has two main strategies. So what we call our management buyout strategy. So this is us putting money into a business to buy out a shareholder. And that's either we're backing the management teams running that business today to buy out a founder who's perhaps grown a load of value, decided they want to retire or do something else. We'll back the day-to-day management team to buy that person out. There's one bit of that. The other bit of that is founders who come to us and say, I really want to stay invested in my business, but all of my wealth's tied up in it. I'd like to realise, say, a third or half of the value. I'd like to sell that now, take that money out of the business, de-risk my life elsewhere, but still go on the journey for the next 5 years. So that's the half of our business that we call the management buyout side. The other half of our business is what we call growth capital. So this is us investing into the business to go faster. A lot of that tends to be technology, but we do other types of businesses as well. But it's where a founder's got a business to a certain scale, probably funded through their own money, probably some friends and family money, but reach the point that they really want to scale. And to do that, they need some third-party capital and some support from somebody like us who's been on a similar journey in lots of other situations. So there's lots of great fund management businesses in the UK. We think we're a little bit different. So firstly, we invest, truly invest across the whole of the UK. So it's not just London. It's a real regional business. The other thing we do, so we're completely sector agnostic. So we're looking for interesting businesses in interesting markets with interesting management teams. And as long as we can tick those three boxes, it might be a sector we need to understand, it might be a sector we've invested before, but we don't mind what they're trying to do, as long as we can see a way that that business is going to be more valuable in 3 to 5 years than it is today, then that's going to work for us. So we're often asked, what's the difference between private equity, the money that we manage, and the other types of capital that are out there? Bank loans, angel rounds, friends and family rounds, all that really great capital for the right stage of businesses. We think of ourselves as the first professional capital that comes into a business. So professional capital means our full-time job is managing that money and supporting the businesses that we've invested in to create the value. So making the initial investments obviously really important. We want to give ourselves the best chance of doing that well, making sure we're fully aligned with the team. But the second half of that, which is arguably where we really create the value with the teams, is the bit that happens once we've invested. So what can we bring from our experience to go on that journey that means in 3, 5, 7 years time, however long the journey is going to be, where all the stakeholders are going to make more money in 3, 5, 7 years than they were today. And that's the bit for us that differentiates private equity to the other types of capital. Is one, we've got the time and resource to really work hard with our portfolio companies. And two, we're really aligned with the people we're backing. If we invest in a business and we're investing and taking a 20, 30, 40% equity stake, management are continuing to own 50, 60, 70% of the equity. The bigger the business is and the more value the business is at the end of our journey, the better we've all done. So we're completely aligned. Some of the other capital we've talked about, so like a bank loan, it's great capital at the right time, but that bank loan, the bank is very focused on getting their money and their interest back. So the size of the business in 5 years' time, they want to see it grow, right? Because that's a good thing for everybody. But really, they want their money back and they want their interest. Versus private equity that's really aligned to keep going. So it could be, and we've had this several times before, that we invest in a business with a team and the journey's for 2 or 3 years is the plan, but we get to 2 or 3 years and actually there's still loads more growth to do. As an equity investor, we can sit around with all the stakeholders. We might decide, actually, let's go a bit further because we think we can all do much better if we keep going. Whereas some of the other capital we've talked about quite focused on getting their money back in the time frame they talked about when they initially made the first investment. Private equity, by its definition, is long-term supportive capital. We're not in a humongous hurry to get our money back. Obviously, we don't shy away from the fact that we are trying to turn £1 into £3. That's why our investors trust us with their money. We pretend that that's not what we're doing. What we're not doing is we're not trying to do it in a hurry. So we're not trying to flip it. All the bad stuff that people might think about private equity, that's not how we do it. So we accept that whatever plan we have when we invest, the only guarantee is that's not what's going to happen. It's just how up and down that journey is going to be. It's never going to be like this. Hopefully it's not going to be like this, but it is definitely going to be bumpy because that's just what growing a smaller business in the UK is. But it's important to say we're not lazy capital. So by patient, we're definitely on the journey. If we think there's more opportunity to grow value, then we're really happy to be on that journey. What we're not going to do is just put our investors' money into a business and it just sit there sort of meandering along, not delivering the growth. Are they going on the same journey as us? So sometimes we'll meet a business and they don't really want to grow the business faster. Great business, they're doing really well from it. That's probably not right for private equity. We want to meet the management teams and the entrepreneurs who believe they've got something today that's worth £1. And by doing some smart stuff over the next 3 to 5 years, that pound's going to be worth £3, £5, £10. One thing in common that every entrepreneur and founder and owner of a business who comes to see us has is they want money. They want money to do something. And that's either to go through some sort of ownership change transaction, super happy doing those, or it's growth capital, super happy doing those. So they all want cash, which is fine because that's what we have, so that works. But the smart ones demand more than just money from their investor. They want support. They recognize that the stage they've got to the business at needs some third parties who have done this before, not because they know better than the management teams, because we often don't. It's just that we have a wider breadth of experience across our team, across the businesses we've invested in, across our network of people. And that support is really important for us to make sure it's support and not interference. So what we're not going to do, we're not going to come in and run a business. We wouldn't know how to do that. But we want to create a strategic framework that allows the management team, who are in the day-to-day, fighting fires all the time, all that stuff that has to happen. But we want to help them create time each month, so traditionally a board meeting, where we're going to sit down with them, probably with a non-exec, and really talk about how's it gone, so a bit of looking backwards, but mostly looking forwards. How are we doing against what we said we were going to do this year? What do we need to change? And that could be, actually, this is going really well, so should we invest a bit faster? Should we open a new office? Should we recruit more salespeople quicker? Do we need to expand the factory quicker because sales are coming through quicker? That's quite strategic in its thinking, so we create that environment. And then twice a year, we want to sit down with our management teams and really think about what's the big audacious goal for 3 to 5 years' time. And we do that sort of half a day, 1 day strategy sessions with the team. And we think by creating that environment, it allows management teams to share the challenges with us that they've got, and it allows us to bring the breadth of experience that we have from being invested over 50, 60 portfolio companies, thousands of businesses over the last 40 years. We can bring that experience and that knowledge to help them see around corners a bit, but also just to go a bit faster. And then specifically for YFM, we've got loads of great people, lots of experienced investors, lots of experienced portfolio directors who sit on the boards of the businesses we're invested in. And then we have a few what we think of as functional specialists. So we have a head of talent. So our head of talent, their role is working with portfolio companies to make sure they've got, if we want to recruit, and normally at the C-suite, maybe one level down, if we're looking to recruit a CRO for the first time or a sales director for the first time, our head of talent isn't going to come in and do the recruiting, so they're not a recruiter. What they are going to do is help you build the best process you could possibly build to find the right candidate. because we're quite mindful the businesses we're backing in are going through a growth stage, so it could be what we did last year isn't right for what we're going to do next year. So the head of talent's very much in there, helping management teams think about people, recruiting, bench strength for the future. We've also got head of RevOps, which is quite a new hire for us. It's quite a new thing really in the UK, I think, very American. So RevOps is all about understanding the data behind sales. Where are our leads coming in? Right at the top of the funnel. So where are we finding leads? How much are we paying for them? And then how do we convert them all the way through that sales funnel? And then when we're converting them, how much are we charging? How are we upselling? How are we getting more from our customers' purses? How are we making our customers even happier that they want to give us more money? All data that most management teams that we meet are collecting intuitively. But as we're going on this big scaling journey, once we've invested, that needs to become a bit more systemized, a bit more data-led, a bit more CRM. And our RevOps person works for us full time. He can come into the business once we've invested and help set all that stuff up so that in 3-5 years' time, when the business is 50 times bigger, that data is at the fingertips to make the decision. And then the third functional specialist for us is ESG. So ESG is obviously big. It's been big for a long time. It feels like it's getting bigger and bigger all the time. We feel like we've always done it. We just used to call it doing the right thing. It's great now it's got a title. It's great now that more and more people are thinking about it. And certainly when we're investing at the beginning, we're thinking about it. And when we're looking to realise the best investment at the end of the journey, buyers are definitely thinking about it more. So it's really important. What we do with our ESG manager is they will work with our investment companies when we first invest to make sure that they're doing the bare minimum, the stuff they absolutely have to do. We've got to get that right really quickly. So once they've sorted out that baseline ESG work, the things that really need to happen, they're then going to work with the portfolio companies to think about what extra could we be doing to make the business better. And of course, by better, I mean more valuable. And that could be that the market's moving a certain way. So businesses that are more attractive to buyers have this particular service or this particular product line that has more of an ESG angle. Our ESG manager will help do that thinking and create that framework, go away and do the research to come back to the management teams who they're busy running their day job, doing the strategy that we've all agreed to. Our ESG manager will then bring that thinking to the team to have the debate. Doesn't mean we're going to do it. It just means that there's an environment and a place for them to really explore it in a data-led way.